So someone had asked me the other day, when is the right time to sell your properties if they're not meeting your expectations? It prompted me to want to make this episode because we're currently selling 6 units. And as you know, we had 34 units and now we're bringing that down to 28. Currently 3 have been sold and 3 are in process. And this is actually the first time I've ever sold. Sean has sold before because he had flipped properties in the past. But yeah, you guys are probably wondering, why are we selling? Because normally I advocate holding onto properties. Well, we think it's always important to constantly recalibrate your investment portfolio based on its performance and also based on your goals. In terms of performance, it's opportunity cost. If you're investing in properties that aren't performing as strongly as you'd like, you could be allocating those funds elsewhere. And when it comes to your goals, when you're in a phase in which you're working really hard on wealth accumulation, you usually are more prone to investing more heavily and wanting to move faster. But when you're really prioritizing peace of mind, maybe things are going to change and you might want to focus on wealth preservation instead. We decided to sell because of an accumulation of many reasons, so I wanted to go into these reasons today. Now, first off, I want to give you guys some of the numbers on the purchase price and the selling price of some of these homes. So one of them was a duplex that we bought for $57,215, which we sold for $73,000. And then we have a second duplex we bought for $45,000 and we're selling it for $55,000. And then for the single family homes, one of them we bought for $40,750 and we sold it for $53,000. And then the second single family home we bought for $38,285 and we sold it for $50,000. In total, we bought these 6 units for $181,250 and we're selling them for $231,000, which is pretty good. Now let's go into the reasons we're selling. The first and probably one of the biggest reasons we're selling is we want to get rid of our adjustable rate mortgages. With our portfolio, we had 3 mortgages that were adjustable rate mortgages. And what does that mean? Well, with adjustable rate mortgages, your loan has an interest rate that may change periodically depending on the market conditions. So we got loans with 5-5 ARM, and that means that after the first 5 years and each of the 5 years after that, things will readjust and the time period is starting to come up sooner than we thought. We wanted to be prepared because right now interest rates are close to 7%. So if our mortgages readjust, that would eat into our cash flow severely. We originally had 3 mortgages. 3 was for a duplex, and because we sold it, we were able to get rid of this mortgage completely. And then with the other 2, one was for an 8-property portfolio and the other one was for a 4-unit portfolio. So selling the other 4 units means we drop the principal a lot with these mortgages. This would keep us safe in case things change. Again, 3 out of the 6 are in escrow, so we'll see if everything goes smoothly as it's not completely done yet. Now, point number 2 is we want to trade up for better properties in the future. The units that we're selling haven't been performing as well as the rest of the ones in our portfolio. So unfortunately, it's not always sunshine and rainbows with real estate investing, and I want to keep it real with you guys. So after having stayed in the properties for a while, the tenants of 4 of the units moved out and we thought they needed a decent amount of repair to make them rent ready for new tenants. We didn't want to do this, so we decided this was the time to cut these from our portfolio. We also found that the multifamily properties in this market had a more problematic tenant base that would cause issues in the properties. Because these were cheaper properties, we were naturally going to have these types of problems. As we've been buying better and better properties lately, we've been reevaluating our strategy. Because last year, we even bought a property that was a midterm rental. It was better than our primary home in Dallas, and it really allows us the cash flow and appreciation we'd want in a unit. So getting cheaper properties was great starting out, but as we've been continuously leveling up our finances, we've decided it's time to trade up for better properties. Number 3, another reason is the complexity of having too many units. So something we really didn't think about was that the more and more properties we have, the more annoying tax filing gets, and the more we have to pay our CPA to help us get everything ready. This year, we paid a whopping $10,000 to our CPA, and it made us think about how we can simplify things for us instead. Keeping track and monitoring every property status was also starting to get confusing. Even the property management company started having trouble handling too many units. As an example, one of our units was vacant for 3 months because the PM was waiting for our approval on a repair, but we thought it was already approved. They didn't follow up with us and it just sat there for a long time. I started feeling like things were slipping through the cracks and sometimes things were not taken care of as timely as it should be. That's why if we're gonna have more properties, we wanna have higher quality ones that are generating higher cash flow. Now, the last reason is peace of mind. So getting rid of higher interest debt means having more peace of mind. I don't wanna have to think about our cash flow cutting when things change. And I don't wanna have more meetings with my property manager to review our portfolio while I'm traveling. It's not like it's that much work, but at the time, our property management company was managing 17 units. And I think that's a lot of units to go over every time we talk about properties. And then also after starting to sell some of these units, we started thinking maybe we should just completely get rid of our adjustable rate mortgages. So in the future, maybe this year, we might want to sell a few more just to get rid of them completely. And that would allow us to own all but one of our units in Georgia free and clear. Right now, I'm at the stage of slowing down and enjoying ourselves. It was a lot of hard work to build up our portfolio, and during our travels, we've really been trying to take advantage of what we've built. It's sometimes hard to get out of that should idea that we should work on things, but now we realize, for example, that we don't have to work on our online businesses if we don't want to. Our real estate allows us to cash flow, which pays for our living expenses and more, and it's really allowing us that sense of freedom. And while traveling, I'm also starting to understand that I don't want to continuously leverage money when I don't have to. A lot of investors are all about constantly leveraging to get more and more properties. Yes, it's great and can build your wealth quickly, but I do always recommend not to over leverage. And it's really important to gauge your stress levels and peace of mind, because when we were constantly buying, we were constantly managing renovations, which can be very stressful. We've been slowing down because we wanted to stabilize our portfolio, not have to worry about renovating all the time, and just take some time to enjoy what we built. So all this made me realize I don't want to be the biggest, baddest real estate investor. I don't want to aim for a ton of money. I just want to have enough to live a life of freedom without worry, and that feeling where I have enough and I can help others as well. I'd rather have less units with a lot of appreciation and cash flow than more units with less. So I'm really reevaluating what properties we have and figuring out what the ones we really want are. So that was a lot of reasons, but let me tell you guys what I'm more gearing towards in the future. In terms of real estate, what I'm interested in is properties overseas. That's one of my biggest dreams, and it's been on my bucket list for a long time. I've been kind of eyeballing Japan. Right now, the yen isn't as strong as the dollar. You can get a bigger discount, and there seems to be less criteria when it comes to investing overseas there. But I would say this, the property values there are actually depreciating, so it's not actually a good investment when it comes to appreciation. But when it comes to kind of a lifestyle thing, it's something I am interested in because it would be great to have another home base overseas. So I'm not recommending anything. This is just more of a personal goal for myself. We'll see if it happens. I'll let you guys know if it does. Secondly is when we move back to Dallas, I'm not completely sure when. I probably want to get another primary residence and possibly Airbnb it again in the future. I kind of love this strategy I'm doing where I buy a house and then I move after a year or two into another home that I buy or something like that. Or I move out, rent it out, and then travel again. But again, we'll see. It's all up in the air, but I feel like Airbnb has been a great strategy for us. And then lastly, I am interested in larger multifamily properties. If I got a larger multifamily property, I think that's a lot easier than getting a bunch of single family home units. So that's why that's under my radar right now. I'm now more about getting quality units that are generating more cash flow, more appreciation and stuff like that. So I hope you guys enjoyed this episode on my reasons for selling these 6 units. If you guys have any questions, let me know in the comments below. And if you guys enjoyed this episode, smash the like button, subscribe, hit the bell button to be notified of my latest videos, and I'll see you guys in the next one.